Hey, Brian Steer, Stuger Real Estate Team, hopping on today to answer a question that I've been getting a lot lately with interest rates being as low as they are. A lot of past clients reaching out asking if it is a smart time to refinance their house. And there's a pretty simple answer to that. And the first thing is just you have to ask yourself a couple questions. First of all, why do you want to refinance? There's three major reasons most people want to refinance. First one being would be to lower their interest rate. And what that does is lower your payment. So if you are paying a 5% or higher interest rate, it may make sense for you to go ahead and look into refinancing now that the rates are hovering at or below 4% to reduce your monthly payment and the overall cost of your loan in its entirety because of interest rates. Also, people do it to shorten their mortgage. So if you have a 30-year mortgage, you can go ahead and refinance into a 15 or 20 year. Right now, 15-year loans are hovering in the low threes. So there's big savings there in interest. Now your monthly payment's going to go up some possibly, but your interest payment's going to go way down over the life of the loan. That will save you a ton of money. And finally, some people are looking at doing cash out refis. So with home prices being on the rise over the past couple of years, a lot of people have equity built up in their home and are considering going ahead and taking some of that equity out at a low interest rate and using it for other things, either to consolidate debt or to do investments or to pay for a kid's college or things like that, which can be great things. Just be careful with cash out refis. You don't want to go using your home as a bank to buy items like boats and cars and things like that, because that's kind of really where you end up getting yourself in trouble. So after that, you want to find out the cost. There is a cost to it. Usually the closing cost on a refinance is anywhere between 2 and 4%. So if one of those reasons works for you and you're good with the cost, the last thing that you want to figure out is it worth it to you? The first reason is easy. If you're over a 5 right now and you're in a long-term loan, it makes a lot of sense to refinance if you can lose a whole point on your interest rate for the next 30 years. Same thing if you can afford a 15-year, it can make sense, but the best way to explain it is to just simply show you the math. So let's just take, for example, a loan of $200,000 at a 2% cost to get the refinance done, so that's $4,000. If you take your interest rate from a 6 down to around a 4 where they are now, it's going to save you about $244 a month in your payment. So with a $244 a month savings, if you times that by 16 months, that brings you out to $39.04, which basically is your break-even point. And what I mean by that is, if you're saving $244 in 16 months, you're going to save the $4,000 that you spent to refinance your home. And then after that, all the savings basically goes directly into your pocket. So after that 16 months, you've already paid yourself back for the $4,000 you spent to get the loan. Now, from there on, it's just $244 worth a month worth of savings. So just a quick couple reasons why you should refi and some reasons why you probably shouldn't refi. Hopefully this is informational and helpful for people. If you have any questions, feel free to drop me a note, give me a call. Brian Steer, Stuger Real Estate Team, 609-425-9428. Thanks, guys. Catch you on the next one.